All right, everyone, get ready for another deep dive. This time we're tackling market volatility, our main source, the recent analysis from Market Deep Dive. And let me tell you, things are getting interesting out there. We all know the stock market's been a bit of a roller coaster lately, right? Well, the S&P 500 just finished its third down week in the past 4. And get this, good news is actually making investors nervous.
Yeah, it's a strange situation for sure.
It is. It's like the economy seems to be doing well, but everyone's acting like it's a bad thing.
It's a paradox, isn't it? A strong economy is typically a good thing, but in this case, it's feeding this underlying anxiety in the market.
So what gives? Why is everyone so freaked out?
Well, a lot of it boils down to inflation. When the economy heats up, prices tend to rise, and that makes investors jittery. They're worried about how the Federal Reserve, might react.
So they're thinking the Fed might step in and try to cool things down.
Exactly. You see, when prices climb too quickly, the Fed often raises interest rates. That can make borrowing money more expensive, which can then put the brakes on economic growth.
So it's like investors are afraid the Fed might overreact and slam on the brakes just as the economy is hitting its stride.
Precisely. And this fear is fueling a sense of déjà vu. Remember earlier this year when we saw a similar pattern? Every positive economic report seemed to trigger a mini market meltdown.
Yeah, I remember that. So we're stuck in this loop where good news leads to fear and fear leads to market instability.
Exactly. It's this weird push and pull dynamic. And speaking of the Fed, their actions, or potential actions, I should say, are adding another layer of complexity to this whole situation.
Right, because they're in a tough spot. They want to keep inflation under control, but they also don't want to stifle economic growth. It's a tightrope walk for sure.
It is. Market Deep Dive actually highlighted this, pointing out that just a few weeks ago, the market was almost certain the Fed would cut rates in December. Now, the odds have dropped to below 60%.
Wow, that's a pretty big shift. So what's behind this sudden change of heart?
Well, the Fed has been sending signals that they're in no rush to lower rates anytime soon. They're taking a wait-and-see approach, which is making the market a bit uneasy.
Okay, so the Fed's playing it cautiously, which is making investors nervous. And on top of that, we've got the tech sector taking a beating. Market Deep Dive called it the worst performing sector this past week. What's going on with tech? Why the slump?
Well, it's a perfect storm of factors, really. First, you've got the rising U.S. dollar. That puts pressure on profits for many tech companies that earn a big chunk of their revenue overseas. When the dollar is strong, those foreign earnings are worth less when they're converted back into dollars.
That makes sense. It's like a currency headwind for tech companies.
Exactly. Then there's the issue of rising treasury yields. Those are basically the interest rates the U.S. government pays on its debt. When those yields go up, it becomes more expensive for companies, especially those in growth-hungry sectors like tech, to borrow money.
So we've got a strong dollar and rising borrowing costs. That's 2 strikes against tech already.
You got it. And don't forget about those lingering worries about potential trade tensions with China. That uncertainty is never good for business, especially in a sector like tech that's so globally connected.
Right. The trade war jitters. So it's a triple whammy for tech. A strong dollar, pricier borrowing, and trade uncertainties. No wonder they're feeling the heat.
Exactly. And all of this is happening as we're on the edge of our seats waiting for Nvidia's upcoming earnings report. Market Deep Dive suggested this report could be a big deal, a real make-or-break moment for the tech sector.
Now, why is everyone so focused on Nvidia? I mean, they mainly make graphics cards for gamers, right?
They do, but it goes way beyond that now. Nvidia has become a key player in the whole artificial intelligence explosion. They supply those powerful chips that are essential for things like self-driving cars, advanced medical imaging, all sorts of cutting-edge technology. And they have a history of exceeding market expectations, So their performance is seen as a bellwether for the broader tech sector.
So if Nvidia does well, it could boost confidence. But if they stumble, it could send the whole sector into a tailspin. It's like they're the canary in the coal mine.
That's a great analogy. Now, we've talked a lot about economic factors, but let's not forget about the political landscape. That always adds a layer of unpredictability to the mix. Market Deep Dive noted that the market has been reacting cautiously to the newly elected Trump administration.
Yeah, there's been a lot of talk about how some of the proposed policies like tax cuts and tariffs could shake things up.
Right, and some of those policies, while potentially beneficial in the long term, are raising concerns about their potential to fuel inflation in the near term. That uncertainty just adds another layer of complexity to the market's current state of mind.
Okay, so we've got the economy, the Fed, tech struggles, and the political wildcard. A lot to process. With all this volatility, are there any safe havens for investors right now? Any places where they can find a bit of stability?
Well, Market Deep Dive pointed out that certain sectors, like utilities and real estate, actually saw gains amidst the recent market downturn. These are often called defensive sectors.
Defensive, as in they're kind of hunkering down and weathering the storm.
Exactly. These sectors tend to offer more stability and predictability in times of uncertainty. Think about it. People always need electricity and a place to live, regardless of what's happening in the stock market.
Yeah, that makes sense. So investors are basically flocking to these sectors because they're seen as safer bets when things are shaky.
Precisely. They provide a bit of a buffer against those wild swings we're seeing in other parts of the market.
All right, so we've got good news, sparking fear, tech taking a tumble, and investors seeking shelter in defensive sectors. It's definitely a roller coaster out there.
It is, and there's a lot more to unpack. We've only just scratched the surface of this week's market trends.
Okay, so we've established that the market's kind of freaking out right now. Good news is causing anxiety, tech is in a slump, and investors are looking for safety. So where do we go from here? How do we make sense of all this?
Well, one way to cut through the noise is to focus on the data, the hard numbers. Market Deep Dive really stressed the importance of keeping a close eye on upcoming economic indicators, especially those related to housing. Think of it like checking the pulse of the economy, seeing how healthy it really is.
You mean things like housing starts and building permits? I've heard those terms thrown around, but I'm not exactly sure what they tell us.
Right. Well, housing starts refer to the number of new residential construction projects that have actually begun in a given period, basically how many new homes are being built. And then building permits, those indicate how many projects have been authorized but haven't necessarily broken ground yet.
So those numbers give us a sense of how confident builders are feeling about the economy.
Exactly. If builders are expecting a strong demand for housing, they're going to be more likely to start new projects, right? But if they're worried about a slowdown, they'll probably hold back and wait to see what happens.
So these housing numbers could either back up the Fed's cautious approach, or they could throw a wrench in their plans.
Exactly. They're a really important piece of the puzzle. And speaking of puzzles, let's not forget about the retail sector. We've got earnings reports coming up from some major players like Walmart and Target. Those results could give us some valuable insight into how much consumers are spending and what that means for the overall health of the economy.
Right, because consumer spending is a huge part of the economy. And market deep dives seem pretty optimistic about the potential for improvement in retail earnings, especially after those strong retail sales numbers we talked about earlier. But is that optimism realistic given all the market anxiety we've been discussing?
Well, that's the million-dollar question, isn't it? Remember, consumer spending makes up a significant portion of the U.S. economy. If those earnings reports are strong, it could help calm some of those market fears. But if they're weak, it could really add fuel to the fire.
So it's a high-stakes moment for the retail sector. And speaking of high stakes, we can't forget about the elephant in the room, Nvidia. Market Deep Dive made it sound like their upcoming earnings report could really shake things up.
Oh, absolutely. Their report is definitely a must-watch. Remember, we talked about how Nvidia is a major player in the AI world. Well, those chips they make, they're essential for all sorts of cutting-edge technology.
Right, self-driving cars, medical imaging, that kind of stuff.
Exactly. And Nvidia has this track record of surpassing market expectations. So if their earnings are strong, it could be a sign that the AI boom is still going strong, which would boost confidence in the whole tech sector.
But if they disappoint, it could make people question whether AI is really taking off as quickly as everyone thought.
Precisely. And that could send tech stocks tumbling. Either way, the market is likely to react pretty strongly to whatever Nvidia reports.
So Nvidia's success is kind of a barometer for the future of AI in a way.
You could definitely say that. Now, we've been focusing a lot on the economic side of things, but we also can't forget about the political landscape. That always adds an extra layer of uncertainty to the market.
Yeah, for sure. And Market Deep Dive touched on how the market has been reacting to the newly elected Trump administration, specifically how some of the proposed policies, like tax cuts and tariffs, might impact inflation.
Right. Some of those policies, while potentially good in the long run, have people worried that they could lead to even higher inflation in the short term. And that uncertainty makes investors very nervous.
Yeah, it's like trying to walk a tightrope between boosting the economy and keeping inflation under control.
That's a great way to put it. Now, along with all this, Market Deep Dive also pointed out some interesting things happening in commodity markets. Specifically, they noted that crude oil prices have been going down lately.
Oh, really? Why is that happening?
Well, part of it is due to the strong US dollar. That makes oil more expensive for buyers using other currencies, so demand goes down a bit. But there are also concerns about too much oil being produced next year, more than people will need. Some analysts are saying this could push prices down even further.
So what does that mean for the average investor? Is this dip in oil prices good or bad?
Well, it could be good news for companies that use a lot of energy, like airlines and manufacturing companies. Lower fuel costs mean higher profits for them. But it could be bad news for energy companies, obviously.
So even in all this volatility, there are potential opportunities if you know where to look and understand how all the different parts of the market are connected.
Exactly. It's all about staying informed, recognizing the big trends, and making decisions based on the information you have.
It sounds like Market Deep Dive has given us a lot to think about this week. Inflation fears, tech sector struggles, housing data, Nvidia's big earnings report, it's a lot to keep track of.
And we even delved into the world of commodities with that slide in crude oil prices.
Yeah, we've really looked at the market from all angles, and it's definitely a wild ride out there right now. So, as we wrap up this deep dive, what are the key takeaways you want our listeners to walk away with?
Well, I think the most important thing to remember is that volatility is just a natural part of the market. It's not something to be afraid of, it's just something to understand.
So instead of panicking when the market drops, we should try to understand what's causing those movements and make smart decisions based on our own investment goals.
Exactly. Another crucial point is to stay informed. Keep an eye on those economic reports, earnings announcements, and any major political developments. All those things can really impact how the market's feeling.
And tools like Market Deep Dive can be really helpful for that, right? It's like having a roadmap in this ever-changing landscape.
Absolutely. And lastly, don't underestimate the importance of diversification. Spreading your investments across different asset classes can really help lower your risk and make your portfolio more resilient when those market swings happen.
So basically, don't put all your eggs in one basket, especially when things are a bit shaky. Makes sense.
Exactly. By diversifying, staying informed, and keeping a long-term perspective, you can navigate market volatility with more confidence and maybe even find some good opportunities along the way.
That's great advice. Now, before we wrap up completely, any final thoughts for our listeners, something to really get them thinking about this current market climate?
Hmm. I'd say keep a close eye on that upcoming economic data, especially those housing starts and building permits we talked about. Those numbers could give us some valuable clues about how strong the economy really is and how the Fed might react. Right now, it feels like the market's trying to find a balance between growth and the fear of things overheating.
It's like that sweet spot between optimism and caution.
And remember, knowledge is power when it comes to the market. The more you understand what's going on, the better decisions you'll be able to make.
Until next time, stay curious, stay informed, and keep diving deep.